Welcome to Finpod, your daily financial digest. I am Evan, and this is the show where we cut through the noise so you can trade with an edge. Today's episode is brought to you by Fintwit.ai, your go-to platform for real-time signals and stock intelligence. Let's get into the action. Walmart is the big story on social media today after reporting slower than expected U.S. comparable sales. The stock dropped around 9% as investors reacted to signs of consumer stress, with management noting that high fuel prices are forcing shoppers to make difficult trade-offs. While the company did raise its full-year guidance, the market is clearly focused on the cooling demand. Then we have Moderna, which plunged over 20%. This is a classic case of profit-taking after a historic, record-setting surge yesterday, sparked by positive clinical trial results for their personalized cancer vaccine. It is a reminder that even the best news can lead to a sharp pullback if the stock has already run too far too fast. On the flip side, ROST Stores is surging nearly 8% in after-hours trading. This off-price retailer delivered a massive earnings beat, with same-store sales up 10%, driven by strong customer traffic that suggests the value retail sector is holding up much better than the broader consumer discretionary space. Coinbase is also in the spotlight, up over 7%. Traders are buzzing about a White House summit on crypto policy that has institutional investors re-engaging with digital assets, plus the company's ongoing global expansion into tokenized securities. Finally, Tempus AI is up nearly 9%. The rally is fueled by the positive read-across from the Moderna cancer vaccine trial, which validates the technology behind Tempus AI's pending acquisition of Personalis. Turning to the broader market, stocks faced a tough session today. The S&P 500, the Dow, and the Nasdaq all slipped, as the rally in treasuries we saw yesterday completely faded. The 10-year yield climbed back toward 4.7%, signaling that investors are still deeply concerned about government debt and the potential for higher-for-longer interest rates. It was a classic reversal, proving that the market's relief over bond buybacks was short-lived. In the AI economy, the focus remains on the structural shift from experimental tech to mission-critical infrastructure. Reports are highlighting that agentic AI, those systems that can act on their own, is creating an exponential surge in data center and energy demand. We are seeing nations and enterprises commit billions to sovereign AI compute, and companies like Alibaba are reporting triple-digit growth in AI-related revenue, proving that monetization is finally catching up to the hype. Beyond the major movers, Deere & Company is a standout today. They reported a strong quarter, with net income topping $1.3 billion, and management is calling 2026 the bottom of the agricultural equipment cycle. The stock jumped nearly 7% as investors look toward a recovery in order books and tech adoption. On the earnings front, Alibaba reported a revenue beat, with its cloud and AI services unit acting as the primary growth engine, helping the stock climb over 1%. Meanwhile, NTES shares fell about 6% after a mixed report where revenue growth couldn't quite mask the profitability pressures that investors are currently scrutinizing. FUTU Holdings also reported today, showing a 35% jump in revenue and a strong increase in funded accounts, which kept the stock in positive territory. That is the wrap for today. We have covered the retail pullback, the biotech profit-taking, and the resilience in the AI and off-price sectors. If you found this breakdown helpful, please like, share, and subscribe to the channel. Leave a comment if there is a specific stock or sector you want me to cover tomorrow. And for those looking for proprietary data and stock recommendations, visit Fintwit.ai. Thanks for listening, and I will see you back here tomorrow.